This is one of those videos that I've been wanting to make since a long time. It's one of the most hotly debated topics in personal finance. Should you invest in real estate or the stock market? Some people love the real estate, some people love the stock market. Hardly any few people actually like both of them at the same time, right? So, on one hand, you have real estate, tangible, leverageable, often romanticized as the ultimate path to passive income. On the other, you have equities, illiquid, historically high performing, and backed by some of the greatest businesses on the planet. So, what's the superior investment? And more importantly, which one is better for you? In this video, we'll pretty much explore the key differences between real estate and stocks, from returns to risk, amount of time spent on it, the effort, mindset that's required for this to help you make an informed decision for your financial journey. Right. So let's start with real estate. Let's look at the strengths. Let's look at the drawbacks. Real estate, it appeals to many investors because of one critical factor: it's control. You can choose the property, you can decide how to finance it, you can determine the rent, you even influence the asset's value through renovation. Right. That's powerful. But it comes with weight. Real estate is also a leveraged asset class. That means you can use borrowed money to magnify your returns. With just 20% down, you can control a property worth five times your investment and benefit from both cash flow as well as appreciation of the property. There's also a tax efficiency angle to it. Depreciation, interest payments, mortgage interest reductions. 1031 exchange allows investors to defer taxes and build wealth more efficiently. But it isn't a risk free game. Real estate is capital intensive. It requires you to be putting upfront cash, ongoing maintenance, timely renovations. There's vacancy risk, which basically means that if there's no tenant, you're not going to be making any cash flow. You got headaches even when you have tenants. Sometimes they could be squatting there for longer than you imagined. Market cycles where real estate is pretty much stagnant for a very long period of time. There's also a lack of liquidity at times when the interest rates are not in favor of people buying homes. If you need to exit quickly, it could take weeks or months, and sometimes some people are pretty much never able to exit as well. Let's be honest, despite what influencers tell you, real estate isn't passive, it's a business, a profitable one, but that requires operational thinking and resilience. So let's look at the other option: stocks. All right. What are the strengths? What are the drawbacks of stocks? Stocks pretty much represent ownership in businesses, real companies, revenue generating businesses. Whenever you buy a stock, you're not buying a number on a screen, you're acquiring a piece of Apple, Google, or Coke, right? Stocks are incredibly liquid. You can buy and sell them within seconds and barely any cost. There are no roofs to repair, no tenants to manage, no middle of the night emergencies, and no leakages. That makes stocks investing truly passive, especially when done through low cost index funds or ETFs. Historically, the stock market has delivered an 8 to 10% average annual returns over long periods, making it one of the most consistent wealth builders in human history. And while you can't leverage stocks as easily as real estate, you also don't take on nearly as much concentrated risk. Your diversification is instant. You own the S&P 500, you own 500 companies in one move. It's not like a real estate where you buy a particular plot or a house or a mansion on a particular area. You're not diversified in areas, right? Not diversified in geographies. Stocks allow you to do that with just the S&P 500. So what's the downside? The downside is volatility. Stocks fluctuate daily. Emotionally, it can be taxing. The temptation to sell during downturns is strong and costly. And unlike real estate, stocks don't give you that physical, tangible reassurance. For some investors, that matters. For some, it doesn't. So let's do a comparative analysis. Let's compare them head to head across a few dimensions. Let's look at liquidity first. In that, stocks do win instant execution, no paperwork, no agents, none of that to worry about. In the second one, let's look at control. Real estate wins, you manage the asset, you decide what you want to do with it. Effort, that's the next one. For sure, stocks win there. They're completely passive. You don't need to worry about them. Cash flow, real estate wins. Rental income can be steady, so your cash flow keeps coming through. Dividends, on the other hand, and cash flow may or may not be that easy, and appreciation on stocks could be tough on the ones that pay a lot of dividend. Diversification, let's look at that, right? Stocks, I would say, pretty much win there because it's much easier to spread risk. And in leverage, you basically win through real estate. It's more accessible, more scalable. Volatility, real estate again wins. It feels more stable, but in reality, both fluctuate just differently. Stocks move on a daily basis. Real estate, you don't go in checking your property value on a daily basis, right? Taxes, real estate has more deductions. Stocks do benefit from tax advantaged accounts, but I would say that one real estate does take the win in taxes. So neither asset class is perfect. They serve different investor personalities and financial goals. What do smart investors actually do? That's what we should be looking at here, right? Here's what I believe seasoned investors understand. You don't have to choose one or the other. In fact, many of the world's wealthiest individuals, from Buffett to institutional funds, use both. They use stocks to build scalable, diversified, passive portfolios. Keep in mind, this is what they do. They use real estate to generate cash flow, shelter income from taxes, and strategically use leverage. The truth is, the best investment strategy is the one that aligns with your values, your lifestyle, and your risk tolerance. If you want total hands off growth, start with stocks. If you want to roll up your sleeves and build equity through management, real estate might be your game. So, in conclusion, is real estate better than stocks? The answer isn't binary. It's pretty much personal. It depends from a person to person scenario. The goal is here is not to pick a side. I'm not the one who's going to choose real estate over stocks. The goal is to build a portfolio that compounds consistently. It protects the downside, aligns with who you are. If this helped you think differently about investing, give the video a like, subscribe for more intelligent money conversations, and tell me in the comments, are you team stocks, are you team real estate, or are you team both? Thank you so much for your time.